Hi, it's Dwyer. It is June 15th, 2025. Always 1776.com, a free site. Also, money 1776.com, a free site. Nothing I say in this video should be construed as investment advice. I want everyone watching this video to do their own due diligence. Your operating assumption should be that I may own any of the stocks that I mention in this video, and that the reason I own them is to make money. Trust no one, including me. Rather, consider this video to be an invitation to do your own due diligence, right? To do your own independent research concerning the subject matter that I mention. Remember, the opinion you should follow should be your own. Just consider this video to be a second opinion from a complete stranger online. Now, I believe studying transactions and litigation is worth your time, simply because the opportunity to get passive income is always worth your time, right? There are people going to work, working hard, lifting objects, using their hands, making things to earn a living. I found part of your effort to earn a living should include research, investments, getting passive income. Now, yesterday I made a video where I recommended to people that they consider buying Exxon, buying Chevron, buying Occidental Petroleum, right? Why? Because I believe, given Iran's proximity to the Strait of Hormuz, given the fact that 25 to 30% of the world's usable oil passes through the strait, given that this war looks to me to be one that's going to last for some time, given that it could escalate quickly, I believe that that's going to leapfrog energy prices, right? Oil prices. I believe that these energy companies are going to jump in value. I believe also that the jump in energy prices is going to jump inflation all over the globe. And understand what politicians have been telling you about having inflation under control. It's simply not believable. The United States has to roll over something like $10 trillion worth of debt. Understand, they're going to necessarily have to monetize the debt. We have a dog and pony show set up where, banks are going to have to buy some of the debt, supposedly to strengthen their books. Right? That inflation is further going to fuel the rise in oil prices. Right? One of the reasons for this war, one man's opinion, right? I'll make wide statements here, just understand it's my opinion. You do your own research. Trust no one. But one of the reasons for this war is to distract the populace. It's to have you blame the war for the inflation that's caused in large part by past spending, past deficit spending, the debt on government's balance sheets. So let's talk about some recent events. Netanyahu has openly said that the United States supports him. Right? The United States, despite saying, and when I say despite saying, we're talking about Marco Rubio, Secretary of State, despite saying words to the effect of, It's not our war. It's not our decision. We're not involved. The United States is involved because they're helping intercept missiles. Right? Understand, not all the actors involved or possible actors are state actors. You have, your friendly world terrorists who believe in certain causes, and of course, they might take certain actions to hold responsible the people behind the actions that they don't approve of. Right? Just understand the United States has picked a side here. It's the side they're helping to intercept missiles. That raises the risk to the United States, right? Both from state actors and from non-state actors. As investors, we really have to think about the consequences. How does this land? What's the risk involved? Prices really adjust according to risk. Which way are the prices going to move? Folks, I'm expecting, it's Sunday right now where I am in California. I'm expecting when Monday comes and markets open in the United States, I'm expecting oil to continue to spike upward. I'm expecting Exxon and Chevron to join in the bounce. Let's go one step further. There are many ways to play oil. Exxon and Chevron and Oxy, let me mention them, are just three of the ways. You have oil ETFs. You have the XLE, right? The Energy Select Sector Spider Fund. Just understand, the XLE, more than 22% of their holdings are Exxon. About 17% of their holdings are Chevron. Right? Let's get into Hess because Chevron is trying to acquire Hess. Hess is about 2 to 3% of the holdings of the XLE. Right? You have the Vanguard Energy ETF, the VDE. Just understand Exxon's about 22% of that ETF. Chevron is 13 to 15%. Hess is 1 to 2%. Right? You have the iShares U.S. Oil and Gas Exploration and Production ETF. Right? These are just 3 ETFs of several. That symbol is IEO. There, just understand, Exxon is 10 to 12% of that ETF. Chevron is 8 to 10%. Hess is 3 to 5%. Now let's talk philosophy, right? Investment philosophy. Let's talk about why I in particular like Exxon, which I've owned for a long time, right? And Chevron in particular, right? Yesterday I also mentioned Oxy. I think Oxy is a great way to play this, but let's focus on Exxon and Chevron. I need for people to understand that you have a situation involving those two that has led to a lot of volatility involving those two. As a risk taker who runs gamblersadvisory.com, I'm looking for volatility when I invest. Right? I'm looking for there to be uncertainty. I'm looking for prices to be dampened by that uncertainty. So if that uncertainty gets resolved in my favor, there's bigger upside. Right? I'm not a conservative investor. I believe it's all a gamble. Right? So let's talk about why the gamble in Exxon and Chevron piques my interest. Understand that Chevron is in the midst of buying Hess for $53 billion. The deal should have closed already. But of course, Exxon popped out of the bushes, figuratively speaking, and said, not so fast. We have a right of first refusal over Hess's 30% stake in Stabroek, which is a huge oil field off Guyana. Right? It's Exxon and CNOOC. In other words, a lot of big energy companies are involved in this. Right? Exxon and CNOOC had a joint operating agreement in the Stabroek project, and part of that agreement gave them the preemptive rights, in their eyes, to purchase Hess's stake in that project. Chevron's position is, hey, that right of first refusal isn't triggered here because we're buying Hess. Right? We're assuming their position. So the question is, does a change of ownership of Hess trigger Exxon's right of first refusal? It's a big arbitration. They just had the arbitration. The ruling is expected in a matter of weeks. Now, my point to you is, whoever wins that arbitration is going to experience a huge run-up in market cap. Right? There's uncertainty. Who's going to win, Exxon or Chevron? Now, you know that I like to hedge. The word I used to use in making sports videos here online, the word I actually personally prefer is straddle. Right? By a straddle, what that means is the bet is really a two-headed bet. If either side of the bet hits, then I'm hoping to win. I started using the word hedge because too many of you said to me, hey, no gambler uses the word straddle. I don't understand what you mean, blah, blah, blah. You have a whole hedge fund industry out there. People understand the idea of a plan A and a plan B, right? Hedging risks. So what I want people to do is to just think about the idea that if you own both Exxon and Chevron, then you're guaranteed the winner of the arbitration. Let's make another point too. This is the business world, right? If Chevron and Exxon reach an agreement, right, folks? This is what happens most of the time in litigation, right? You just heard of McDonald's reaching an agreement with Byron Allen. Here, there's a clear win-win. If Exxon and Chevron reach an agreement on what to do with this project in Guyana, then you win, right? I personally believe that once this situation is resolved, the overhang over both companies is going to be removed and both are going to jump in value. So I like the volatility and the uncertainty caused by the arbitration over Hess's 30% stake in this project. Right? That reason is independent of this war. Right? I believe this Hess arbitration has hung over both of these companies, depressing their market caps. I believe once that's removed, the net is going to be huge. The upside's going to be huge. And of course, as this war drags on, and what I want people to do to get an understanding of the public mood is to read the comments to the earlier video. Someone, and I appreciate the comment, right? I'm not criticizing the comment. I appreciate the comment because I think in real time, we want to be able to look back and have evidence of the mood in the room, right? Someone left a message where they said, hey, look, this war is not going to be protracted. This shouldn't be construed as an invasion, akin to what's happening with Russia and the Ukraine. Right? This is different. And this should be resolved quickly. Right, folks? The issue of Iran's nuclear capability and development has been hanging in the air for years, hasn't it? You know, understand too, these politicians have their own agenda. They always want to convince you that these military skirmishes, conflicts is a better word, are going to happen and end very fast. Right? They always want to convince you of that. Let me say too that what exactly is the difference here between what's going on here right now, where the United States is professing neutrality, and the United States professing neutrality prior to Pearl Harbor in the early 40s, right? Where now we understand they were doing things to provoke Japan. They were involved in Lend-Lease. They were helping the Allies. Everyone knew they were facilitating the Allies. Right here you have the United States openly helping Israel intercept missiles. Now, whatever side of the war you're on, just understand that this war could be protracted. This war could escalate. This war could undercut assurances we were given that spending in the United States, right, would be controlled, that steps would be taken to address inflation. Folks, you don't cap your spending by getting involved in military conflicts. When you're already $36 trillion in debt, you don't control your spending by being involved in conflicts by the Strait of Hormuz, where 25 to 30% of the world's oil is passing through. Right? You understand, as this drags, oil, which is in the mid-70s right now, a barrel, is going to creep into the 90s. Folks, as you can imagine, that's going to buttress the market caps of Chevron and Exxon, both of which are vertically integrated. In other words, they're involved in every aspect of the oil business. Right now, the layman on the street doesn't understand the impact on markets that these military skirmishes have. Folks, people are going to get rich off this. Right? Just understand, if oil continues to creep higher, oil in the past has been over $100 a barrel. Know your history. Right? If it gets there, you can imagine the huge upside holding Exxon and holding Chevron will give you. Then if there's a further announcement that these two headstrong energy companies actually reach an agreement to resolve the Guyana conflict, right? The upside will be magnified. If one side wins and one side loses, right, that Hess arbitration, just understand either Chevron completes their deal with Hess and, is in a even better position than they are now, or that deal falls apart and Exxon is strengthened. The key is your portfolio will be strengthened if you have the winner of that arbitration. You have an opportunity, since, of course, this military conflict is bullish for both. You have the opportunity to buy both, get the run-up from the conflict, and then be guaranteed the winner. Right? And I don't believe the downside is that significant because the market has already discounted the possibility of the deal not going through. So please do your own due diligence. Just understand that the energy space is fragile. When world events like this happen, right, the price of a barrel of oil could easily skyrocket $20 a barrel, $30 a barrel, or higher, right? Think about how protracted the Russian-Ukrainian conflict has been, right? Let me just say, other countries trying to distract their populations will prop up a weakened combatant like the Ukraine, right? And will prolong that war. It's a mistake to look at two enemy combatants and to say, well, this one's Goliath, this one's David. This war won't last that long, right? You're kidding yourself. What happens is suddenly the world joins together, or at least parts of the world, against Goliath, right? They have their own agenda. They want to prove to their populations their morality, right? They don't want the population focused on things like domestic unemployment, right? They want the population to feel that high gas and utility prices are a result of these two countries fighting and them being on the right side of history, right? Every side has a group that feels that it's the right side. Different countries have different agendas, right? I'm just telling you that this military conflict, in my eyes, is going to last for several weeks, right? Take advantage of the upswing in the energy prices. Let me also make another point too, and it's foundational, right? Someone can say, and I have some friends who are really touchy-feely, right? I don't want to profit off of military conflicts. Right, folks? Understand. Somebody's going to profit off the military conflict. Just, it's either you or your neighbor. Right? Just understand all of the prices you pay are formed by a lot of inputs, including world and political and military uncertainty. Right? Let me also put it differently too. You're actually helping energy markets by investing in energy at a time where there's an energy shortage. Let me hear from you. I hope you leave your comments in the comment section of this YouTube video. Thanks for stopping by.